Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, I'm going to show you one example of one of the morning gap trades from this morning and how it worked out. We're going to go over the chart in detail. You can see it on the screen. It's Merck, MRK. But first, let's describe exactly what gap trading is. As day traders, we need opportunity. In order to get opportunity, we need stocks to be moving in one direction or the other. That's what creates the opportunity for us traders. So gap trading is when stocks are gapping higher or lower at the open, it creates the opportunity we're looking for. And the specific opportunity is when we can identify a specific price level where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. So as a result, I teach a course where traders learn everything they need to know in order to trade the gaps successfully. Traders learn what criteria we use, what type of volume on these stocks are we looking for, how much of a gap higher or lower in the morning are we looking for, what type of profit target are we looking for, what type of stop loss order do we need to be aware of, and most importantly, how do you calculate these specific price levels where the stocks are going to be drawn to and then have that price reaction from in the other direction? Everything traders need to know is taught in my course at LazyGapTrader.com. The other thing I do is give traders an opportunity to get my gap trades each and every morning sent to them by email at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of today's email. As you can see, it arrived at 9:04 a.m. and that's Eastern Standard Time. Now, today is Tuesday, but it's like a Monday since yesterday was a holiday, so we didn't have a ton of stocks moving at the open. However, we are now in earnings season and companies are going to report their quarterly numbers by the dozens each and every day. That will create opportunity because many of these stocks will be moving at the opening bell, either up or down. That creates opportunity for traders. This morning we had 7 possible gap trades on the board today. Now we only want to take the trades that have the highest probability of success. Therefore, we only take the trades that hit the specific numbers that traders are taught how to calculate in the course at Lazy Gap Trader. If a stock does not come in to the specific level that we calculate, we don't want the trade. It's not the highest probability trade we can have. Therefore, it's off the board. In order to find success with day trading, traders need to understand that they don't have to always be in a trade. But what we do is take the highest probability trades we can find that increases our winning percentage and therefore it increases our pocketbooks. So the stock that did come into its level today was Merck. I say gap higher. Resistance levels are $63.51, $65.16, and $66.80. Stop and profit target is about 35 to 65 cents. These are minimum profit targets. We'll get more into that when we go back to the chart and discuss Merck in detail. Here's a 5-minute chart of Merck. So let's pick apart exactly what happened. On Friday, the last trading day, the stock closed at $58.66. The stock was getting a nice lift higher this morning, gapping up at the open, creating the opportunity that we're looking for. The price level that was identified in the email you just saw was $63.51. And by the way, this is the same exact price level that any trader that's taken my course is able to calculate on their own. You can see what happened. The stock traded right up to that price level, pierced through it by just a few pennies, and immediately reversed course in the downward direction, making a low already of $62.20 for about a $1.30 gain in just about 50 minutes worth of trading from the entry point. Now, in my course, I teach traders a specific strategy where we learn how to turn these trades into risk-free, emotionless trades. And what that means is we learn a strategy where we can lock in some gains and get more than the minimum profit target, like on Merck today. There's an entire video module in the course that teaches this specific strategy, how to maximize our gains while reducing our risk to zero as the stock is headed in our direction. Traders, this is just one example. We do this each and every day. There are always stocks moving at the opening bell. We're here to take advantage of those moves. That's what we do as day traders. And here's one of the most important things that I can tell you about this strategy. When you learn why this works, you'll have a different outlook on these trades. You'll have a better understanding of why certain stocks will trade to certain prices and have that reaction in the other direction. When you take a lot of the guesswork away from the trades, and that's what this does, it gives you an added confidence when taking these trades. A lot of trading has to do with confidence being in at the right price. You remove guesswork from the trades and add back in confidence, and you can start earning profits from these trades on a consistent and regular basis. Now's the time to learn this strategy because we're going to get into the heart of earnings season right here, right now. The trades are going to come fast and furious. If you want to learn everything there is to know about how to trade the gaps successfully, come over to Lazy Gap Trader, check out the course. This is a strategy that you can use each and every day for the remainder of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.